When you get into an offer, you might do an initial underwriting. You say, hey, this might be a great deal. Then you start diving in and making sure you start confirming the information that you have written down in your spreadsheets to make sure that you have a clear enough picture to feel confident with your offer. The offers that we spit out there, it's not, hey, I'm going to throw it out there and hopefully it sticks. It's, no, we've done our due diligence.
Hello, and welcome to the Syndicating Your Way to Wealth show, the podcast that educates, inspires, and empowers you to build wealth through multifamily real estate syndication. I am your host, Yelfrey De Leon, and today we have not one, but two very special guests on our show, and those are Mike Lopez and Perlamar Vega. Hello, guys. How are you doing today?
Hi, good evening.
Doing good. Hey, everyone.
Hello. Thank you, guys. Thank you so much for being here today. I want to first talk a little bit about what the intention for this podcast is going to be. The reason why we are here today and the reason why this is going to be a very special episode and very different from the different episodes that we have done in the past is because today we will talk a little bit about an experience that we had as operators on a past deal that we thought that it was very important to share with you in case that some other people are experiencing similar stories. So that way you can have some takeaways, you can learn from our past experience and potentially implement it on your own business. So with that said, I am going to pass it over to our lovely guest to introduce themselves. So why don't we start with Mike? Mike, how are you doing today? Tell us a little bit about yourself.
Yeah, thank you. Thank you for having me on as well. I appreciate the opportunity to be on and actually just to recap this whole experience, because I think there's going to be a lot of takeaways that we could go ahead and take from this, and it's going to be beneficial for us to revisit it and then also for the listeners as well.
Absolutely. 100% agree with you on that.
So as Yelfrey mentioned, I'm Mike. I'm part of a team. Our company is Empowered Capital Partners. And what we do is we specialize in helping syndicators and getting into deals. And we provide either the EMD, soft costs, or even provide a gap funding for those cases where we're running a little short on the capital raise. But those are our services. That's what we specialize in. And then also in this case, in particular, we were the sponsors on it.
Great. And, just to reiterate for our listeners, sponsors or KP, those are the people that have had already some experience in real estate syndication. They meet the requirements to be able to sign on the loan for a deal. So, Mike, I know that you've been on a few deals before. Can you tell us a little bit more about that? And what's your experience been so far?
Yeah, so the real estate experience has actually started back in 2013. That's when I first started buying residential multifamily. We're talking about fourplexes, triplexes, and duplexes. Starting to get into commercial properties later on in 2018, and then got into commercial multifamily, essentially 5 units plus. That's what would qualify as commercial. And yeah, we were able to close a few deals, mostly on the East Coast. And then we're under contract on a few more as well, south to where this deal is more or less at. So, but it is a new game. It's a different feeling from buying residential multifamily and jumping into the space on the commercial side. It's a lot more of running a business, in my experience, because you put a team together, you have property managers, you come up with what you're going to do prior to raise the value of this property. To where I feel like when I jumped into the residential side, even though it was multifamily, it was more of am I going to cash flow and what do I need to do to maintain that?
Right.
This was a little bit different, but yeah, as far as the syndication part, this was actually something I was introduced through a common network that we're in, and saw the possibilities of, hey, okay, you don't have to do this all yourself. You could actually create a team and then bring on other investors, passive investors to go and increase your buying power. So which that to me was really unique, something that I've never done or heard of before.
Awesome.
Great.
Thank you so much, Mike, for that introduction. And yes, definitely, multifamily real estate, it's a totally different ballgame. Why don't we pass it over to Perlamar? Perlamar, why don't you tell us a little bit more about yourself?
Absolutely. First, thank you, Geoffrey and Helios, for the invitation. Thank you, Mike, for sharing this time with me as well. I appreciate it. Um, and yes, first of all, this, like Mike has been saying, this deal that pulled all of us together and we was able to work as a team. And that has been an amazing opportunity. My background is more in property management. I have been over more than 25 years in the property management industry. And I end up in this multifamily real estate or commercial real estate industry because all my life, we have been always saying we are going to buy, like Mike say, maybe a two-place, maybe four apartments in a building, and I'm going to manage, right? So trying to get to that, we was finding one, unfortunately, a situation. It was about how we can get the money necessarily to do that, and trying to find out ways that I end up learning about syndications and multifamily syndications, and I end up being in this mentorship where also you guys has been, and that experience during the mentorship allowed me to learn much possible ways, to get really in the real estate, in the commercial real estate. But based on, and later on, I know we are going to be talking about, we have different roles in the syndications, but my skill, my strong area, it is in boots in the ground as a manager. I have also accounting in my background, so I also do underwriting as well. But in this specifically deal, the value that I was providing to you guys was as an asset manager and working with being boots in the ground, doing the tour in the property and things like that.
That's great. Thank you. Thank you so much, Perlamar. And one thing that you mentioned, when you were introducing yourself, which I found very interesting, is the way how you got into multifamily real estate, which is very similar to the way I started in this business. I had bought my first multifamily property back in 2020 at the beginning of the pandemic, and my friends and I were looking for ways like, oh man, how do we expand? How do we scale this business, right? And I was doing a lot of research until, nowadays with all of this artificial intelligence, I started to get bots on my Instagram and social media, asking me like, hey, do you want to buy apartments without using your own money? And I was like, man, that sounds great. How do I do that? And then that's when this became, part of, on my level of awareness. And so, as both of you mentioned, we all joined this network of professionals, people that have been in the industry for so many years, and that has led to the businesses that we all now have and operate, and to all of the success that we are already seeing, which is just the beginning of our trajectory in multifamily. With that introduction, I want to dive right into it. So why don't we talk a little bit about how we came across this experience, how we came across this deal. So, just a little background story. I remember it was at the end of February, probably beginning of March. I was in a conference, big partnership. It's one of the conferences that's put together by some of the operators from the mindset group that we started in multifamily. So I had just met Mike Lopez in person, great guy, by the way. And so, on my way to Miami, to my hotel, I get a call from a broker that I had built a really strong relationship with in Georgia. And so he called me up and he said, hey, Geoffrey, I have this great deal for you, which I know it's going to check all your boxes. And then as he starts to explain the deal, right? He gives me the breakdown. He starts selling it to me. And I'm like, oh man, the deal sounds great, but we don't do anything under $50. But you know what? I'll take a look at it. I'll bring it over to my team. And anyway, for the purpose of this podcast, let's call it ABC Apartments. So
Yeah.
ABC Apartments listing price, 4.1 million. So, we got super excited. We started doing our underwriting, our market research. We discovered that it was in a great area in Georgia. And we said, oh man, you know what? Let's put our stuff together. Let's put our team together. I contacted Mike and Perlamar. We were, obviously along with their teams. And so, we put an offer for 4.1, and literally 2-3 days later, after we put an offer right at the asking price, right? Then I get an email from the broker saying, hey, thank you for your offer. It was a great offer. However, the seller has reevaluated things and now he's asking for 4.5. That shook me up.
Yeah. Yeah, no, I remember that phone call because I remember when you sent over the underwriting, we started looking at it, we're like, okay, we can make this work. And that's a big picture for our listeners to understand, is that when we get the numbers, we're looking at rent rolls, we're looking at T12s, seeing what their expenses are, what's the income, and where's the underlying value. Because what we do is when we look to buy these properties, it's not, hey, we're trying to buy them and keep them running the same way they are. We're looking to add value to them, improve them, increase the value so that in 5 years, if that may be our exit strategy, we could sell it and we improve the property, the community, and also we're able to make money for our investors. And at the 4.1, it made sense. And I remember he had us waiting for like a week. Was it a week, 2 weeks?
Oh, yeah. That's a very important thing to mention. Yeah, it was.
Yeah, because it was preempt. You preempt for 4.1. So that was a preempt, remember. It was not just listing. So you was having that deal off market.
Mm-hmm. That is correct. Yes, it was an off market deal. And they were asking, so they said 4.1 is the price. However, to preempt the deal, give us 4.5 and we'll take it off the market, or we'll sell it to you right away.
Yeah. Mm-hmm.
Yeah. And I know this was like a negotiation that happened for like several weeks, because I think it actually went to market, if I'm correct, if I'm remembering right. But I remember it went to market and we actually were competing against other buyers when originally it was off market.
Correct.
That's right.
Correct.
Yeah. And so for us, when we did the initial underwriting, 4.1 for us was, to be honest, it was a steal. We thought we were getting a little bit under, and we're like, man, it's worth more. So let's go ahead and just give them a full price offer, what they're asking for. And it threw us off when he was like, oh, you know what? We actually want more. We expected a little bit more for a fair price, but 4.5 was a reach.
Right.
And I remember that's when we were like, man, we just can't justify the 4.5. And I think that's when you went back to the seller and you asked them these questions like, hey, I can't make this work. Why is it 4.5?
Exactly. Yeah. So, just to continue on that, 4.1 original offer, they came back, okay, offer 4.5 to preempt the deal. We'll keep it off market and we'll sell it to you. Nobody else will see it. So what we did, we said, okay, well, we cannot justify a 4.5 offer. However, we'll offer 4.3. So then we send a second LOI. So yeah, that's when all of these negotiations started to happen. And what happened after the 4.3? I think that, they came back.
That's when they went to the market. That's when they decided no. And then they went to the market for the 4.5 that they was asking.
Right.
Yeah, I remember this because this was around May time, because I remember you were calling me and I was in Italy at that time, and it was like 12 o'clock at night. And and you're like, hey, the seller's coming back. He's like, we have a strong offer, but there's another strong offer as well. We can make the deal work if you guys could come in at a full price offer. And what tipped us off, or kind of tipped the scale, because it wasn't making sense at the current rent roll and everything that we were seeing, was when he came back and said, you know what, for this month, we're already, the seller has actually been collecting even more than the previous month. Something to like the amount of like $5,000 on top of like what he was receiving before. We're like, wow, that's a huge jump. Like what changed between then and this month? Because at those prices, 4.5 does make sense. And we could see where the seller's coming from. And I think that's what you shot on the email to find out what had happened. So,
yeah. So at that point, essentially, we started first digging deeper into the financials. Like, okay, fine. So you're saying that you had higher rent collections in the last month, but I do not see it in the rent roll. Maybe do you have an updated rent roll that you can show us? Typically when something like this happens, either they increase rents, right? They renovated apartments, increased rents, or for the most part, that would be it, right? So we are expecting that we would see this in the rent roll. However, when they sent us the updated T12, what we actually found out was that their delinquencies had decreased. So people had paid those back debts. And right. And there were other components of it that made it seem as though, they had higher collections and then the NOI was higher for that month. But in reality, it wasn't that they had higher rent collections. It was just
past due rents.
Past due rents, correct. And so I think that was a misrepresentation of facts that led us to offer or make an offer for 4.5, which evaluated the price of this deal.
Yeah. And just to put this out there, we got to a point where we're at the best and final. So that means, hey, there's a couple offers that are on the table, maybe 3. And they're looking for your best and final offer. And usually they put a deadline. And I remember that's the only reason why we felt like we were, pressured to go ahead and give an offer. And the reason why we were able to jump up to the 4.5 and justify was based off of what the broker had told us was what we were going to see in our April numbers, because we still hadn't gotten the April numbers. We were like in the middle, or we were in May, but we hadn't received them yet. So we're like, okay, so then if based off of that information, then yes, we'll go ahead and submit a 4.5 offer. And we had to, on the best and final, they asked us a ton of questions. We answered them and then gave them the final offer.
Yes.
So that just to explain why we sent
the offering.
Exactly. And later to come out, it was something different. But yeah.
Yeah, 100%. So, it's important that you mention this, Mike, because, during those questions that we answered for them, what they did during the best and finals process, they sent us a questionnaire. And so, during that questionnaire, which needed to be filled out by the KP, in this case, Mike, they asked us a lot of questions about, who's your lender, what, there were many components of it. And one of the questions that they asked was if we wanted to put some contingencies in, which we included 2 very important contingencies. And those were financing contingency as well,
occupancy.
And the occupancy contingency, right? Which later on became a problem. And we're going to discuss a little bit more about it during the PSA process. So, it's important to talk a little bit about that questionnaire.
Yeah, and you bring that up, but there's so much that goes into even us before making an offer. I remember even when you guys had approached me, you guys had already talked to a property management company. You guys already had the mortgage broker lined the insurance quote. Exactly. Yeah. So there's a lot of due diligence that even happens even before you submit an offer, just so that our listeners know and people that are looking at getting into the space is that when you get into an offer, you might do an initial underwriting. You say, hey, this might be a great deal. Then you start diving in and making sure you start confirming the information that you have written down in your spreadsheets to make sure that you have a clear enough picture to feel confident with your offer. The offers that we spit out there, it's not, hey, I'm going to throw it out there and hopefully it sticks. It's, no, we've done our due diligence. So, and that's all attributed to you guys' team. You guys had really handled that really well and really came prepared, and it showed. I think that's why when we sent the offers to the broker, not only were we probably the best offer, but also the best prepared, where they felt that the transaction was going to go in smoothly.
Absolutely. Thank you, Mike, for that. And yes, definitely, as Mike mentioned, there's a lot of things that go into making an offer on a property. And so, yeah, I agree that I think that, the way we prepared everything. So normally when you send an offer, they are expecting the LOI or letter of intent, right? With what your price is and like your the language on the LOI and all of that stuff, right? But in addition to that, we showed them how prepared we were. We told them like, hey, we have a team here that's ready to go. We have the capital. We already have a property management company. We already have a lender. We already have an insurance broker. We have everything lined up. And so we showed them that, and we showed them even our business plan, everything. So, there was no questions in their head that they were going to have a smooth transaction with us. So that's why our offer came to the top. They didn't even think it twice, and they accepted our LOI. So, yeah. But just to transition a little bit, based on that misrepresentation of facts, right? We get an offer for 4.5, we send them the offer, and they accept the offer. So now what? Let's talk a little bit about that process. What happened next? And I invite you guys to talk about it.
Yeah, I recall that we immediately got in contact with an attorney that was my team also, who recommended, because they have previous business with them. And we was ready to prepare the PSA, but then we found out that the seller wanted to bring his PSA to us with his already contingencies and everything in that PSA. So we received from the seller the PSA, and that's when we started the analysis of his PSA and the negotiation with the PSA. But we found out that in that first PSA that he provided to us, there was some contingencies that we made sure that we put in our LOI, because for the convenience of the audience, most of the time it's recommended in the LOI to put a summarize of all the contingencies that you want to have in your deal, because that is the base for your PSA. That's how that works. So we was having it there, but they didn't took it in consideration when they created their own PSA, and that's when we started negotiations. And it was one of the team from was Patricia from Helios, who was in contact with the attorney. She was our
the legal
attorney
specialist per se, yeah,
specialist, yeah, and she was back and forward between the attorney, our attorney, who was helping us to do the correct verbiage in the PSA with the changes that we want to be done, and the attorney and the broker of the seller.
Right. Perlamar, you bring a very, very important point, and I think this was one of our major takeaways. Definitely, the fact that the seller was the one who sent us their already, pre-formatted PSA with the language that they wanted and with the contingencies that they wanted. It already put us in a bad position in the sense that we kind of had to abide by what they and his, the seller's attorney wanted to have in the contract. So for the purpose of the audience here, PSA, which stands for Purchase and Sales Agreement, basically is the contract of which, the buyer and the seller gets together to sort of, negotiate the terms of the contract and the purchase. So essentially, what happened here, has Perlamar mentioned, right? So they sent us their PSA, and that PSA did not necessarily agree or match up with the terms that we had put in our letter of intent or LOI. So, we had put in these two contingencies, as we mentioned before, the financing contingency and the occupancy contingency, right? And so, in these contingencies, they just would not agree to have these contingencies in there. And, just to mention, to elaborate a little bit more on that, these contingencies are normally, this is the norm. So it's very standard in, most deals. You're going to see that it's normal for buyers to request that. Sometimes you negotiate a little bit with the sellers, but in this case, the seller did not want to even talk about it.
Yes. And the reason for those contingencies and why it was very important to have them is because that is the way that you protect your investors. Financial contingency, it is not other thing that you are saying, hey, we are going to get this deal if we are going to be able to put this in, be receiving a lending a loan, right? And for us to receive a lending, we are going to need a specific certain amount of market a rate and certain amount of loan to value. And that, of course, that contingency for the purpose of protect that if we are not able to get a lender accepting our deal, because there's something in that process of due diligence that we found out that decreased the value of the property from the price that, for example, we was going to buy for, or the market that cap rate that we was using. The rate that we was using for our underwriting is now bigger and it's going to completely change our NOIs and all that. Then we are not going to receive financing. We are not going to be able to get that property, right? And the occupancy, the reason why is to protect, because unfortunately happens that sometimes not necessarily the seller, but the management that they have in those apartments, once they know that the property is going to be sold, they kind of not follow up with the renewals, not follow up with that. And in order for us to get the financings, we need to keep an occupancy of 90% or more. So we cannot allow them to just do not do renewals or or not do the correct renewals as well, because they can trick us and do a renewal for just a few months. But that's why occupancy contingency is. We want to make sure that they guarantee us certain amount of occupancy to be able to get the lending.
Absolutely.
Yeah, and until now, that when we're negotiating the PSA, we are given limited documents. We're given limited, view into what has happened with the property. So the goal is to go ahead and write down everything that we want to see happen and the timeline that we'd like to see happen, so that it would give us the documents to then go ahead and confirm that everything that they have told us is correct. And so that's why I think all these contingencies, the terminology, everything's super important, so that you can do your due diligence and make sure that the deal, first of all, has been represented correctly, but then also you mitigate your risk in case at that time we were in a changing market. We're still in the changing market right now where it's constantly changing. So you just need to protect yourself. And then now, since we have so many investors, we want to make sure that we protect them and protect their interests. And so that's why all this verbiage was put in there. And it was so interesting. It was weird that multiple times we put in there, these are the things that we're expecting. And then they sent us a document that was completely different, which we were okay with. We'll have our attorney just go in and fix it. We'll redline it. make it so that it goes with what we already previously agreed with. But and then the seller was almost taking it as if we were trying to change the deal on him. And I think that's where that miscommunication between maybe the seller and the seller's broker was coming into, because to that point, we weren't dealing with the seller nor his attorney. We were dealing with the broker that was representing the deal. He had all that information. So it was really interesting, right? Like, I don't know if that jogs your memory there, Yelfrey, but it seemed like almost we were having two conversations, one with the broker and one with the seller's attorney. And it was completely different.
Yeah.
Yes, that was true.
100%. So, you guys definitely hit on a lot of very, very key points here, just to add one more, and, then to follow up with Mike's remark. So, let's not go too far. Let's think about, the volatile market in which we are in today. So, we definitely need those contingencies, as Mike mentioned, because we want to protect the investors. We want to protect investors' money. And, what if we, say we approve this PSA and then the bank or the lending institution is not able to lend us the money because interest rates changed from, I don't know, 6 to 8%. So that would change the deal completely. And so, we will not be able to hit our target returns or ARR to investors. So, and, also to mention or comment on what Mike mentioned regarding the miscommunication between the broker and the attorneys. Oh man, there was a lot of miscommunication here, a lot of misrepresentation of facts. It was a little bit unprofessional, for a lack of better word. And so, yeah, it's, there was a lot. It felt like if we were having two different conversations, like Mike mentioned, yes, we had a really strong relationship with the broker, which helped us to get the deal and, to keep things running. But then, essentially, I'm not sure if the broker wasn't communicating everything to the attorney, or there was a side conversation, but, everything just was not aligning at the time.
And this was all like even prior to us receiving documents, which that's what we needed for Perla to really dive in and do our due diligence to make sure, hey, everything that we underwrote does make sense. This is all correct. But I think the Helios team, Patricia, she was able to actually get us access to the documents prior to a complete execution of the PSA, right?
Correct.
And that's where I think where we are able to, now revisiting the NOI, we were able to figure out like, hey, something's off with this. Because to that point, we haven't seen the April rent roll. We were just kind of going off of what was being told. So when we got access to the April numbers.
Correct.
That's right.
Correct. So, yeah, that had been our experience there. With it's worth mentioning that we were dealing with an institutional seller also. Somebody who is experienced dealing with other big corporations. Somebody who has a ton of experience, a lot of buildings and doors or units under management. And usually, sometimes, it's harder to deal with these types of transactions. At least in our case, when you have a smaller operating company, that's dealing with these institutional sellers. Anyway, just to change gears a little bit here. So we've been talking a lot about the experience with the brokers, with the attorneys, and on the deal itself. But why don't we talk a little bit about our team structure, the deal, and how we split up the responsibilities? I think that that's a very important aspect to mention here and to educate our audience about, how do we even put a syndication deal together?
Okay. Go ahead, Mike, and then I will.
No, it's okay. Go ahead, Perlamar.
Okay, so that is a very, very good, important, Geoffrey, point. Um, so we was able to divide the responsibility since the beginning in our team, and that's helped us definitely to be more fast in do part of those due diligence. Like since the beginning, we knew who was going to be working with that with what, and we was very into communication as well. So every time that any of us do one of our a part, we jump in a call, we contact us, we email us, we text. We have a group text, and we talk all the time. What's communicating between us to be able to see where we at in everything with the PSA process at the same time with what we was finding, any information is information that we was finding, and all that process that we have as a due diligence.
Yeah.
Yeah, I was just going to say, it really does take a team, and everyone has a specific role in making this happen. Everyone's responsible for specifics, and then, but at the same time, there's still always someone that is kind of leading the project. And in this case, I would say that was you, Yelfrey.
That's right.
I guess my project management experience came through.
No, you need someone like that. You need someone that can organize and say, okay, where are we at, and kind of bring everyone together. So that really was a role that you fulfilled. But like for instance, Perlamar, she's on top of like the due diligence. You're the one, boots on the ground. You went and visited the property and let us know like what this property needs. Where can we add value? Where are the rents are at? Then we had someone in charge of working with the attorney. We had others working on getting quotes and getting things lined up for the transition of ownership between the previous seller and us. And yes. And then most importantly as well, someone working on raising the capital, right? And that's usually a team effort. But when we talk about raising the capital, we talk about raising not only the money that's needed for the down payment, but we're also talking about the money needed for these improvements, these capital, or the CapEx is what we call it, capital expenditures for the improvements that is going to allow us to add the value to their property. There's a lot of paperwork and communication, but it is so important that you have someone that sees the whole picture and puts the whole team together, but everyone's responsible. That's why it takes a team. I really like that.
Yeah, definitely. And I want to bring also that was precisely your team, Mike, who was really giving us that support in the capital raising and teaching us, because at that point we was all kind of in the process to learn, okay, how we can start getting ready also for the capital raising, because we know that is something that we have to do since the beginning. Capital raising is not just, like you said, a value add. It's also who's going to bring the EMD, the earnest money, who is going to bring for due diligence expenses. And your team was on top of that and giving us all the time a heads up of what was needed for us to make sure that we was going to have that capital. And we really appreciate that. You have a very strong team as well.
Oh, thank you. Appreciate that.
Yeah. Thank you guys.
There is investments from the moment that we find the deal. There you could say those are like a sweat equity investment, right? Actually taking the time, going through the actual due diligence and underwriting. But in actual, there's then costs. Then we're bringing in attorneys to actually go ahead and write out these contracts, review it, make sure everything's in line. And then there's additional costs all along the way to closing. What you consider the earnest money would be one once we get it on the contract, but then you also have all these that you consider soft costs. The appraisals, the inspections, really there's a lot of stuff that goes into play before even getting taken into close.
Yeah, definitely. So, you guys definitely mentioned on all the very key important roles in a syndication, like Mike mentioned, and I will reiterate, it definitely takes a team. It definitely takes a team. This is a lot of work. It's a lot of work putting a real estate syndication deal together. There's many different components involved here. some of which Mike and Perlamar mentioned here. You have somebody who needs to be in charge of capital raising, somebody who needs to be in charge of dealing with the attorney, somebody who it's looking at the potential value adds or construction renovations that we'll do in the building, etc. So there's just a lot. Asset management. You have to re-underwrite the deal 300 times before you actually close on it because
Yes,
things keep changing, and then you get new rent roll, updated T12, updated financials. So all of this, it's a lot of time. It takes a lot of experience, and it takes a dedicated team to be able to.
And you're absolutely right. I want to add to that also, Geoffrey, that one thing that was super good in our team was that we was having more than one person with the underwriting knowledge, because we was able to team up and discuss each underwriting. And sometimes you can create some business structure, but somebody else have a better idea for a business structure, how to bring more value, how to bring our NOI increase in a different way. And we was able to do that in this team. And that's how also we was able to discover this kind of a discrepancies as well. But on top of that, I think that one of the things that it make us really a good team as a syndicators was that we was all with the same values. We was all trying to, first of all, we are going to have a deal that we want to protect our investors, that we are going to really have the returns that we are going to propose to our investors. Because sometimes, unfortunately, people just want a deal and they are willing to, go ahead and take a deal and take this high risk. But in our case, we was having our mentality of, no, we are going to protect our investor. We want a deal, but we are going to do it in the right way. We want to do the things right since the beginning. And I think that that's why at some point the deal didn't went through, but we was okay with that because we learned through the experience. Plus, we was not going to risk the money of our investors, and especially of Mike, that he was going to help us with the capital raising, with the EMD and all that.
Absolutely. No, this is so great. So I think that, Perlamar, that was a great segue into my next question or topic for today. So, since you already mentioned, why don't we talk a little bit more about, what was our experience, but more than our experience, what were the lessons learned through this experience? I think that for me personally, as I mentioned, definitely being aware of the language that you put on your LOI, your letter of intent. You need to be very, very clear about the language. Make sure that you get your LOI reviewed by an attorney, because that was another thing. Like, we had the language on our LOI, but when our attorney reviewed it, they said, okay, maybe I would have phrased it differently. I would have phrased it like this, or, and then the seller would not have been able to take it out or redline it for us. So, I think that was definitely a big, big takeaway for me, particularly. And, it definitely, I think that for the next few deals that we started to underwrite and submit offers for, my team and I invested on a good attorney, made sure that they had reviewed our LOIs, and ensure that we had the proper language in there for potential situations like this in the future.
Yeah. I think maybe it's just to add to that, really going off of, I think maybe where we kind of were a little overeager was underwriting based off of, we kind of went off of, we're going off of the numbers that they gave us to, this is what the broker's telling us it should be coming in. Exactly. And it wasn't that way, but I guess maybe going back to say, underwrite based off the documentation that you have and that you're provided, and then stick with that. Maybe that might have changed the trajectory. I'm not sure, but that might be one takeaway right there.
Yes, it's true. So I agree with both of you. I think that that was the main lesson learned in this experience. Um, it, this is a business based on trust, and that's something that you hear a lot of times is you're starting the business, that you have to create these strong relationships with the brokers, with the lenders, but at the end it's still business, so we need to make sure that everything is on writing, that everything is there for us to be able to see it, um, and that would not be being not having trust in the broker. Is just okay. This is the information that you are providing to us, but we need to see it. We need to have the documentation necessarily, Michael said, and with the attorney, like you say, Geoffrey, make sure that that is a revised by your attorney, and that you have that attorney since the beginning involving the LOI. So that way, when you get back to your attorney, okay, it was accepted, let's go start with the PSA, they are already knowledgeable of our LOI. But yeah, and other than that, I think that every deal is a different experience. And you are going to continue learning in this industry. There's a lot of different ways to do the business. But yeah, it's just learning and continue and grow.
100%.
And I think something that as a team we did really well was always keep in mind keeping in mind our returns for our investors. And that's what geared us to make the decision that we made. It was really hard for us to go and say, like, hey, we spent a lot of hours, a lot of time, and we were even invested money-wise into this deal. So it's really hard for us to say, okay, doesn't seem like we're going to see eye to eye, and it doesn't make sense. I know the seller's really trying to push us to accept these contingencies and accept the purchase price. And then there was potentially some flexibility on the purchase price, but then there was no flexibility on the other stuff that we asked from the very beginning. So it was really hard for us to say, hey, you know what, maybe this is not the right deal, and you kind of step away. But yeah, I think there's always something to be learned from, and that's what we're doing this review of this deal. I think because even though we did not close this deal, we learned a lot from it.
So much.
Exactly.
So much. You know, one other takeaway that I remember Perlamar would always bring up was we need to know the seller's motivation to sell. I think that this one is very, very key, is very important because in this case, you know, the guy is an institutional seller. You know, he owns multiple, like thousands of units all across the United States. You know, if he doesn't want to sell, I mean, he won't sell it. They are not in a rush to sell. So, you know, I think it's very important to understand always, you know, ask this question to your broker. What is the reason for selling this property? You know, is this an operator that needs to sell because of a bridge loan? You know, do they need to refinance? Do they need to, I don't know, they need to dispose of the asset because of poor management? You know, whatever the case may be, you know, we're always looking for underperforming properties that we can take away from those sellers, add value, increase the value, hold it for a period of time, and resell it for a much higher price at the end, you know, giving a big return to our investors. So, you know, I think that was a big takeaway. And, you know, like you guys mentioned as well, ensuring that everything is in writing. And yeah, just keeping it professional as well throughout this whole experience, because it can definitely be very stressful at times.
Yes. Yeah. But the good thing was that you was able to handle it, Geoffrey. At the end, your relationship with the broker was not damaged because we keep ourselves professional. It was not that we was doing something incorrect during the process. So we was able to not affect that relationship.
I 100% agree with you on that. Switching gears a little bit also to, you know, ask you something a little bit more on the personal level and your businesses, right? So is there anything that you guys are currently doing with your businesses that you want to share with the audience? This is your time, please.
Go ahead, Mike.
Yeah, no, we continue to look to partner with great teams like Helios and Perlamar in securing these assets, these multifamily assets. So again, I'm Mike from Empowered Capital Partners. You can look us up on www.empoweredcapitalpartners.com. And you can fill out the survey there, and we'll contact you that way, or you call us. Our number is there as well. And again, we like to partner with teams on as sponsors. In this case, that we did in this deal with the team that we're talking with right now, or if it's just strictly you need EMD, or if you need of a gap fund, feel free to reach us anytime.
Great. Thank you, Mike.
Thank you, Mike. So in my case, and I think I didn't mention before, but my company is GFA Capital Investments. I am mostly in a boots in the grounds asset management acquisition process skills, like I mentioned at the beginning. So I partner with different groups and provide those values, helping them during that process of acquisition. I can be since underwriting if necessarily, do due diligence, contact PMs, to all that process to see if the deal is a possible good deal, and also boots in the ground. I work in the markets in Georgia and in the Carolinas for those positions. And I'm willing to work out of those areas as well, but no as an asset manager or boots in the ground because of traveling. And you can reach me at pvega@GFA Capital Investments, or you can go through the www.gfci.com.
Amazing. Make sure to please reach out to Mike and Perlamar if you have any questions, if you would like to be part of a deal, either as an LP or GP. If you are also another operator who would like to bring value, whether it be as an asset manager, underwriter, raising capital, or anything in any other capacity, definitely feel free to reach out to these amazing operators. They are great people. I have personally, worked with them, invested with them, and you're here for the win.